Good day everyone, this is your European Open briefing for Thursday, July 21st. My name is Michael Frentiades, I'm the Chief Economist here at xm.com. These are the key points you should know about today in the markets. Dollar yen broke above 107. This is a post-Brexit high, mainly on risk appetite and some stimulus expectations. Sterling recovered after a business as usual survey from the Bank of England surveying businesses and a low unemployment for the UK. The euro has successfully defended 110 for now, but the ECB is on top and anything could happen today. The New Zealand dollar was hit as the RBNZ said the exchange rate could be a problem and is preparing the market for further rate cuts. Mainly UK retail sales, ECB and US data such as jobless claims, existing home sales and Philly Fed index. Now, dollar yen rallies as we said. It has hit a 1.5-month high as stimulus hopes, monetary and fiscal. There were some hints that the fiscal stimulus is actually going to be larger than previously mentioned, at around 20 trillion. I think the previous figure was 10 trillion. As well as positive risk sentiment, the Dow hit a 9th consecutive all-time high yesterday. So these factors have dumped demand for the safe haven yen. And we have the Bank of Japan meeting next week, and maybe traders don't want to hold long yen positions ahead of that meeting if they're expecting stimulus. Now, the pound has also staged a strong recovery. What was the reason behind that? We see, by the way, recovery from 1.3060 all the way up to 132.60, though, so that's a 2-cent recovery. That's a big move. And this is because the main factor that moved the pound was the Bank of England agents conducting a survey of businesses. They said that UK businesses were coping with Brexit on a mostly business as usual mind frame. So they are expecting a negative impact. A third of the companies are expecting a negative impact from Brexit, but they are mostly saying that they haven't really changed their plans right now. Also, there was news that unemployment hit 4.9%, which is an 11-year low. And this shows that the UK economy went into Brexit at nearly full employment, so this could limit the economic slowdown moving forward because of Brexit. Now, on to euro dollar. The euro has defended an attack on 110. It's trading around 110.30. The 110 level is looking like a tough nut to crack. I mean, the market drove euro dollar below 110, but it bounced back. Of course, ECB and Mario Draghi, its president, are likely to cause a lot of volatility today. You should remember how volatile especially the euro gets on ECB days, and keep that factor in mind. Maybe there will be some technical adjustments to its quantitative easing program as the ECB seems to be running out of bonds to buy for now. Many German bonds, for example, yield below the negative 0.4 deposit rate, so what's left to buy in Germany? And they have to buy a lot of German bonds because Germany is the largest shareholder of the ECB, so that could be creating some big distortions there. It would be a surprise if something happened, to be honest, but this is what's on the radar. We are also expecting more assessment on Brexit impact, so the ECB's take on that. And just a note that the Eurozone consumer confidence yesterday was not as bad as feared. So 2 days ago we had the zoo, which was absolutely horrible. Yesterday's Eurozone consumer confidence was not as bad, actually beat estimates. So showing that consumers are keeping their nerves following Brexit. The Kiwi dived today. It broke below the 70 cents level. Overall dovish RBNZ, Reserve Bank of New Zealand. The the bank also complained about the strong exchange rate. And it's interesting to draw some parallels and similarities between the New Zealand and Australian central banks. So both don't want their exchange rates to rise. We have also heard the RBA talk down the exchange rate, now the RBNZ. Both could cut interest rates in August, so the market is expecting interest rate cuts from both banks, and both have red hot real estate markets. So just some interesting parallels for you to consider about the two currencies. Not saying that, of course, there are different economies, different setups, but some interesting similarities for the antipodians when you are checking on them. Now, today we have UK retail sales for June. They are expected to have cooled down before the referendum and after a very strong performance in May. We have the ECB rate decision followed by a press conference. As we said, the rates are not going to change. We have US jobless claims and the Philly Fed index. And a bit later we have existing home sales, which is absolutely key housing market indicator. Tomorrow, just keep in mind, it is market PMI day for Europe especially, so we're going to get a lot of PMIs, countries like France, Germany, the Eurozone composite, and of course some UK figures. That's all from me today. Thank you very much for watching and have a great day.